Meantime, broader markets closing out the week with gains, but off their highs of the session. The S&P and Dow both less than 1% from records. The moves come after the latest read on inflation, a September reading delayed by the shutdown, came in about in line with expectations. All this ahead of this year's final Fed decision next week. For more, let's bring in Andrew Davis, Director of Macroeconomic Research at Bryn Trust Advisors. Andrew, great to have you with us.
Thanks for having me. Great to be here.
In terms of the Fed meeting, I don't know what you expect, and maybe it's more important to think out till next year. We're going to get a new Fed chair. We're going to sort of maybe have a shadow Fed. Things will be a lot different.
Yeah, I think that's the main thing. Look, for 2026, we're looking for a slow stretch expansion. We think that the Fed has a lot of optionality here, particularly with the productivity tailwinds that we're seeing. So I don't think it'll be too much of a surprise in this dot plot post-GFC world that we live in. Whatever's priced in going into the weekend, the Fed usually delivers. I expect that. But I do think that the dot plot might reveal some clues about what the committee's thinking as a whole. Ultimately, I think predictability maybe comes back in 2026, maybe fits and starts, but the Fed becomes more predictable. And then that will allow earnings to drive the market, which is healthy.
I mean, in terms of the dot plot, it'll be interesting to see who is where. But it also may reveal, in terms of when we get, sort of the readout, who is where in terms of divisions in the Fed. And so even if you have a Fed chair who is gung-ho on cutting interest rates, you may not have the committee backing that necessarily. So yeah. It feels like there could be more volatility that the market might not be pricing in next year.
Well, I think that the market will live with this meeting next week. I think that we all understand that the Fed is a consensus institution. So whoever you put in there is going to build consensus. The dot plots aren't promises, and I think that they'll be working towards neutral, towards 3% over time. And I think that would be constructive and healthy for the market.
So where do you think they're trying to get to?
Yeah, I think that they take one December, markets letting them do that. And then we see them cutting maybe in that April window. And then one more time, and they're at neutral. We think neutral is right around 3%. So they're not too far off that. And I think that they're just incrementally going to maintain that bias.
Andrew, market breadth has actually, I think, been impressive over the last few weeks, and I think it sets up very nicely for 26, where I'm hearing a lot of the strategists from the street echo some of the same themes, but talk about some elements of where we're going to see earnings growth. Just curious what sectors you want to lean into, because banks look great. Consumer and retail has been very resilient in for the K-shaped economy. We know tech. Where are you leaning?
Yeah, I agree, Tim. I think it's a healthy backdrop, particularly some of the wind that's come out of the sails around. I heard you all talking about Oracle. But look, I think that where we want to focus is this value down trade. The consumer's not a monolith, so it's definitely bifurcated. Earnings calls just this week reiterated that. Kroger saying middle income shoppers acting more like lower income at this point. So we want to look at value oriented plays. And then I think in the AI trade that we're moving towards incrementally stage 2. Out of the chips, maybe into the plumbing, into the picks and shovels. And so I think those are two areas that have our attention for 2026.